everybody, and welcome to another edition of Beyond the Bell. It is Tuesday, February 27th, 2024. It is 60 seconds after the bell, which means it is time to go beyond the news, beyond the charts, and beyond the bell. Sort of an interesting day in the markets today. It may have felt like we didn't really move around a whole lot, and we didn't, but it was kind of an interesting day in the markets, an interesting day for me personally. We're going to get into that and get into the lesson of the day momentarily. Before we get started, Nightbot, thank you very much. I know you're a bot, but I feel like acknowledging you. Make sure we like this stream. Make sure we subscribe. Give me some bells in the chats. I really would appreciate that. Hello to everybody. We are an interactive show here, so for all of you that watch this later on in your evening and on demand, which I know is a decent amount of you, I want to thank you for making us part of your day-to-day routine, and so if you're watching this later on, hello from the not-so-distant past. However, if you're with us live in the YouTube chat, I'm always responding to questions, so if you have any questions, this is an interactive show. This is not one of those garbage college lectures where you're like, please save your questions for the end. No, ask your questions. You're taking time out of your day to be here, and I would like to be as responsive as possible to your questions. So feel free to ask any questions. I have a tendency of going off in random directions with a lot of stuff, but that's okay. On today, we can feel free to do that. So glad to see everyone's doing all right today. Let me know in the chat, guys, were you green or red today? And we'll go from there. But in the meantime, guys, as we start every day, it is time for the big picture. So I started with the ES today, and I wanted to do this. I almost did this before we came on, but I want to do this in front of you guys. Just sort of extend this zone, okay? Now, we look like we're breaking out above the 5090 level. And the 5090 level has been kind of short-term resistance, right? We've got this 5100 level up here in the ES, okay? And, we haven't been able to get any sort of sustained push above that. Looked like this candle here last Friday, we were really going to be pushing up. This was pre-market, and then the regular market opened, and we just sort of drifted back down below. So kind of, levels on levels sort of stacked up here, but we attempted to break out down below this as the markets open today, and we just really couldn't sustain that. The picture gets a little clearer as we move over to everyone's favorite neurotic trading instrument, the NQ, right? So we had this area. We've talked so much about this area down here at 17,700, and we really are, guys, just sort of in a long-term range. I'm not going to do this. I won't leave this on the screen to confuse you guys, but guys, this is really the range that we're at right now, with the exception of one little breakout area here. Or breakdown, I should say. And this is very interesting here. Okay, I want to really get in here because I want you guys to understand this. Any teacher of candlesticks, all right, any regular practitioner of candlesticks is always going to tell you, make sure you're paying attention to the candle wicks as well. Wick, shadows, whatever you want to call them, right? And this is interesting. Sometimes this is an exercise I like to do, just sort of draw these out, right? Anything that's decently sized, right? That's all right. We'll make an exception there. So what are we seeing here, guys? What does all this really mean? Somebody in the chat, tell me, what does all this really mean? Okay. First of all, hello there, James, Paul, Frank. Tiana, nice to see you as always, my friend. Wish you the best. Consolidation. Yeah, so first of all, Drawdown King, that's an excellent answer. It is absolutely consolidation. Whipsaw, Mario, another great word. I'm going to tell you a word that I think is a little better representation. That's just indecision. Okay, indecision on the part of the market makers, the big money, whatever the case may be. And it makes sense, right? We had some pretty major, last couple of weeks, we have major earnings. We've had FOMC. We've had inflation data. We just don't have a whole lot on the horizon. Now we've got some earnings going on over the next couple of days, even some big ones. But sort of the biggest news, at least for the next couple of weeks, is behind us rather than ahead of us. And most of the people that follow things like the options chain, like our friends over at Spot Gamma, will tell you there's just not a lot of volatility, that's in the markets right now. The VIX has been, I got into a discussion about this earlier today. The VIX has mostly been I don't want to say irrelevant, but it's been tough to use in my day-to-day trading, especially as I got into, when I was first in stock trading and options trading. I watched the VIX religiously, right? I watched it on multiple different time frames and levels. I was looking at both the VIX, the volatility of volatility. Yeah, say all that 10 times fast and try to understand what's going on there, right? Velocity of movement, et cetera, all these fun little V terms, right? But the bottom line is that when the VIX is below 15, for me, it's just kind of tough to really use it in my day-to-day trading. So right now I'm just sort of using it as big spikes, big push downs to help me kind of understand. I'm much more using 5-minute ATR to determine, how much the markets are moving. I got to trade feeder cattle instead. I guess so, Ethan. I much more prefer them on a bun, but that's that's either way. No, actually, I've one of my trading goals, guys, and I set trading goals. I always set learning-based goals. I very rarely have dollar-based goals, even almost a decade into my trading career. And one of the things this year was to get more into trading futures outside of the indexes, right? And I've made a few trades in gold and oil this year. I'm basically break even on those two because basically they're almost like different, not only like different instruments, they're almost like different asset classes when it comes to what you're trading and everything from there. Excuse me just a second, guys. Let me toss my phone over there so it's not shaking the desk. And again, I am going to add bonds. I've talked about that. And one of my friends who's traded futures for a number of years, now he's not really a day trader. He's more kind of a he didn't trade that much. More of a market analyst. Works for one of the big companies in Chicago. Just said I should add grains as well. But yeah, cattle may be a stretch. Maybe in 2026 I'll get the cattle. We'll see how that goes. Mario, that's a great question. I'm going to get to that momentarily, but I want to make sure we finish breaking this down first. So to me, this is basically, we can kind of let's move this line here. Do we break out above the 18,100 level, right? So right about up here, let's move this line here. And I want to change this to a different color just so we've got, let's do that. Make it a white dotted line. So for me, this is our breakout area. If we were to push up over this area here in the next couple of days, I know we've got this last sort of tiny little bit of resistance here, but I think if we push back up here, I think we're going to be smooth sailing up above for a little while. It doesn't mean every candle or every day or every moment is going to be bullish, but I'm going to, right now I'm sort of short-term, slightly bullish to neutral. But honestly, guys, another breakdown below 950 and 940 here, I could easily see us testing the 700 level. And quite frankly, that's what I want. I would love to see us, just from a bullish standpoint, I would actually love to see us retest this area and then push up and move back towards new all-time highs. But right now, there's just not a lot of reason to do this in the markets. And guys, again, the big money, the big positioning, not even the day traders are what sort of control the futures market. And if you're if you're big money and you don't have a position right now, there's not a whole lot of reason to get one until we get a breakout or breakdown. If you're big money and you have a long position right now, unless you bought down here and you're sitting in really nice profits, there's not really a lot of reason to get out of your trade, but the trade maybe not growing quite the way you want it. Same thing, if you're big money who's short, there's not any reason to get out of the trade, but you would be concerned if things crack up. So I feel like this is one of those days. You got to be careful about anthropomorphizing the market, right? Because the market is just a collection of the humans that are involved in it. But that's why we do psychology, and that's why we, and everyone says, oh, about the bots and the high frequency traders. Yeah, that's a thing. But who programs those? It all comes down to human execution at the end of the day, even if it's indirect execution, right? And so we get into this situation where it can be the markets are this, the markets are that, and so I caution on that. But it really does feel like the markets are just kind of catching their breath, right? Like it's been a pretty. I said, and those that have either followed me, followed this show, followed the stuff I do individually, followed the stuff I do for Blue Sky, I have been screaming to the rafters for the better part of 6 months now that I thought 2024 was going to be an incredible trading year for day traders. Okay, so here's the cutoff on 2024. And we don't even see most of the first couple of weeks here, guys. And look at how great this has been. So many huge candles on the 4 hours, so much movement, upward movement, downward movement, sideways movement. We've really, other than a couple of small areas, we've gotten some movement. We've gotten some action, and we love that. So this is just, at some point, you guys have seen me on this show do this before, price action contraction leads to price action expansion. That is a guarantee in the market. There are very few guarantees when it comes to the market. There are very few absolutes. That is 100% an absolute. Now, the timing on which it can contracts and expands and how much it contracts and expands is variable, right? It's a constant variable. If that, I know it's kind of an oxymoron, but so we are now in price action contraction. We are going to get price action expansion. That might be when the futures market reopens here in a little bit. It might be tomorrow. It might be August, right? We could go to one of the longest periods of consolidation in modern market history, or we could break out or break down tomorrow. So again, but it all goes to the very simple fact that, the saying that I like to say, I have no idea how many opportunities the market is going to give me tomorrow. All I can do is tell you what I'm going to do with the ones that it does. So I want to catch up on Mario's question. How do you manage your risk for long-term consistency? Well, Mario, first of all, let me commend you. You're asking the right question. Any question that I field that has the words manage and risk in it is usually a very good question, because as our good friend over at the Blue Sky Josh is so fond of saying, and you guys have heard him saying this both in in events like this or on just within the Discord, we are in the risk management business. That's really what this is. We can talk about trading, we can talk about futures, we can talk about the NQ and oil and feeder cattle and all that, but at the end of the day, we're in the risk management business, and those that are able to manage their risk better are the ones who will hang around in this game for a very, very long time. Okay, and that's just, and once you know how to manage risk, as I said on yesterday's show, you want to seek out that leverage. Every bonehead beginner trader, and I can say that because I was a bonehead beginner trader. I was probably more stubborn and stupid than most of you. No offense to anyone out there. Okay, so we're all kind of bonehead beginner traders, right? And I didn't understand how to manage risk, and so I lost quite a bit of money. Most of about 60-70% of my savings at that point, okay? And it wasn't until I learned how to manage risk, and then you can see, so I started managing risk in stocks. Well, then I sought out more leverage in options, and I sought out even more leverage in futures. You can seek out as much leverage as you want. Forex is probably a step too far for me, and it's a highly manipulated market, but regardless of that, you can seek out all the leverage you want, all the position size you want, once you learn how to understand risk, okay? Mario, yes, I'm stupid egomaniac, which risks 1 to 3 minutes, idiotic behavior. First of all, Mario, if you're fairly new to trading, don't beat yourself up too much. I mean, don't get me wrong, you should seek out being a better trader and managing your risk a little better. But honestly, if you're an idiot trader in your first year, you know what that makes you? A trader. I always tell people, do not be, it's okay to hold yourself accountable, which is going to be our lesson of the day. We're going to talk about it momentarily. But ultimately, guys, we are all a little foolish when we get into this game. If you're in your first year, just keep learning, right? Don't beat yourself up too much if you lose a little money or you blow out an eval. But when you blow out an eval, don't be quick to just buy another one and start the whole process over again. Go back and figure out what you did. Was it a risk management issue? Was it, whatever it was. 3 years in, but from Forex. Well, you're a brave person, Mario. Listen to the voices, Max Connor. Nothing. Listen to that. Yeah, Ethan. The little trading goblins in our head can really kind of screw us up. But guys, that is a great segue into our lesson of the day. And so I want to kind of. We don't really need the chart up right here, so I'll just put my pretty face on the screen. And you were okay. So I was down today. Mike's levels are great. Made it back. Okay, that's great, guys. And honestly, I usually try to say this at the beginning of the broadcast. I kind of blanked on it. But again, with Blue Sky, you've got the clearest path to a live brokerage account. You got Mike trading every day. You've got this show. And guys, I've had people watch, when I've done live trading rooms in the past, watch me and says, oh, I learned a lot, but your style's just not quite right for me. And I don't take offense to that, right? Go watch Mike. Maybe you end up trading very similar to him. Maybe you don't end up trading anything like him, okay? But go watch a professional trader do what they do in real time. Okay, and then come to this show and learn some wisdom and break down. We can break down some of the market movement of the day, talk about our trading psychology and things like that. So yeah, definitely. I spent a couple of months watching a futures trader when I first started, and I'll tell you what, I don't trade anything like him. Right? I don't use his strategies. I don't even use his indicators. I don't use his platform. None of this stuff. And he was very specific in what he did. But you know what? He made a lot of money. Okay, and good for him. But I learned a ton from him. And if that's sometimes as simple as I just want to do things a different way, that's okay as well. Okay, you just have to manage your risk. So, Cordell, I wanted for anything on evals, for questions on your specific eval and anything like that, I'd like you to direct you to the FAQ section on the website. As I'm just sort of a guy that's helping out around here and not a Blue Sky employee, I can probably answer your question, but I don't want to misspeak, and I don't want you to get into a situation where you're relying on somebody who technically and legally speaking is outside the company. And if there's something you're really not quite understanding when it regards to the rules, please ask in the Q&A section of the Discord. If you're having a problem with your account, reach out to the support on the website. You go to the website, bluesky.pro, lower right-hand corner, there should be a little cartoon bubble there. You can start a support chat. What do you think about ICT? I'm not overly familiar with it, to be honest, Mario. I just don't know that much about it, so I will try to not speak in ignorance when I don't know. I will not take a cue from a lot of very public people, both celebrities and public officials, and not speak in ignorance about something I just don't know that much about. How did I do today? I was 1 for 1, and I'm going to get into that a little bit because that was part of the lesson of the day. And I've talked about this on this show before. Okay, life gets in the way sometimes in our trading and what we do and how we do it. And I had kind of an unscheduled vet visit this morning. My girlfriend's cat had a little bit of a digestive issue, so I had to take her in. So I'm sitting there when the markets are open, and I don't trade on my phone. In fact, I highly encourage you to not trade on any sort of mobile device or tablet. You're just not getting the screen space. I understand some people are in situations, whether financially or work-wise, or just they're not able to be around a big computer setup during the day. But guys, we're day traders. The 12 monitors setup where you get monitor tan and you need new contacts every day is a little excessive. But guys, you do need a decent, if you're going to be a day trading for a living, you do need a good, nice 2 to 3 monitor setup. Have a computer that has some speed and some RAM to it. You don't need a high-level graphics card unless you want to game on the thing as well. But yeah, make sure you have the equipment and you have the tools. Trying to just, I'm going to pass an eval on a phone. Okay. I mean, that's my my best response to that is okay. Phone trading is difficult. But I did watch some of the markets as I was sitting there, waiting for the little kitty to come back and the doctors to do their business and all that. And so, it was, and it just reinforced my belief that you shouldn't trade during that. But anyway, before I get way too far off topic there, as I have a tendency to do, and most of my clients in my community will tell you, I always say, why answer a question in 1 minute when I can do 7 on it, right? So that's why some of our meetings can run over from time to time. But anyway, I just want to really kind of zero down on something, and this is why I didn't really stress about missing the market open this morning, right? I mean, I wasn't happy, but it wasn't my fault. It wasn't the cat's fault. It wasn't my girlfriend's fault. It was, it just was what it was, right? She had a very important meeting she had to be at. I have flexibility with my work. But guys, why it didn't really bother me is because I can trade, right? And I do most of my trading in the morning, but I knew that I could sit down, and if an opportunity presented itself, which one did, I can make a little money, right? I'm not going to do it on my phone. I want to make sure you guys, because this is something else I did this morning, and I have a tendency of doing this, guys. So, we have Blue Sky's a great and active Discord during the day. I'm a member of several different Discords across various, some on my main account, some on my burners. But I'm all, and I do this and I monitor a lot of these things, even if I don't participate in a lot of discussions, because A, I'm a trader, and B, I'm a trading educator. So I always want to know what people are talking about. What are people struggling with? This is how I came to find these prop firms. I'd never looked into prop firms for the past 6 years. I've been trading completely my own capital. right? And doing my own thing, making my own money, taking my own withdrawals from my account, my name's on it. I got my rhythmic feed, my brokerage account, my platform, all of that, right? So I didn't really ever, even though I'd heard of some of these prop firms, didn't really spend too much time. And then as I had clients asking me about it, I was definitely interested in just looking into it. And guys, this is, I mean, I'll spare you the 10 minutes to tell you the story of some of the processes I had to go through several years ago to set up my own futures account and data feed and all that kind of stuff, to where it's, I mean, guys, if you have $99, you can get any of the standard Blue Sky evals, and within about 10 minutes, guys, you can go from having nothing to having an eval account to trade, a data feed through either Rhythmic or CQG, and a license to like NinjaTrader or some of the other platforms that may let you, you can have all of that for a very, very, very low cost, right? So I was paying several $100s in data fees when I first started several years ago. Thankfully, that's come down across the board. But yeah, it's a little bit of an adventure. But guys, let me tell you this: you still need to learn how to trade. Okay, whether you want to go in a Blue Sky server, you want to go to other people's server, whether they're prop firms or not, whenever people talk about the prop firms, guys, everybody's seen, listen, we all want the cheapest account. We want the easiest way to pass that gets us money the quickest, right? I get that. If I was, I would be in that same boat if I woke up tomorrow with all my knowledge and none of my money, okay? But you still have to play the long game. And I don't mean long as a positional direction, okay? You can go get the cheapest, thing out there, and then you're going to be arguing on, if you're good enough to pass, and if you're good enough to build up, whatever other places call their accounts and get a withdrawal, then, you're going to end up arguing about rules. Well, you traded within 2 minutes of news. Well, you don't have that on your website. Well, we have at our discretion. Well, first of all, if you're in a live sim, they can do whatever the hell they want. They're not going to give you your money if they can at all help it. Okay, so that's another reason you need to get in a live brokerage account. But guys, regardless of that, if you can trade, you can pass an eval. Okay, listen, we are a capitalist country. I love that. That's great. You should seek out whatever product fits best in with you. But guys, think about some of your long-term goals. And nothing irritates me more, guys. Don't just go do it. Right? We could say, well, I wish I would. Gosh, I saw this a couple days ago. Well, I would definitely get this account. It's great, except for this. No. If you can trade, you can trade. End of discussion, end of story. Now, does that mean you're going to pass every single eval? No, of course not. Okay. When I was starting to, I've told this story before, last summer when I was starting to work exclusively with students at prop firms, and this show and some other things were just sort of rattling around in my head, I set up my own RTrader Pro to imitate a 50K Blue Sky account with all the same rules, all that kind of stuff, whether daily drawings and sometimes I had to enforce them myself, sometimes they were automatic. I passed 7 out of 11, so I was not perfect. Okay, so if you fail 1 or 2 evals, you know what that makes you? A trader. Okay, but if you're failing 10 evals, 11 evals, 12 evals, and you're sitting there bitching about the rules, that's not the rules' fault. If you fail 10 evals, you're not ready to be a trader yet, and that's okay. It's okay to struggle at first, right? And this is the frustration with trading, guys. Obviously I'm not obviously going to go off into political, religious, or anything like that rants, but we obviously live a little bit in a environment where people can kind of seek out, whether it's political news or not, the news that makes them feel good, right? And so you can kind of construct a little bit of your own bubble, your own reality, whatever the case may be. In trading, you can't do that. Trading is a binary. You are a profitable trader or you are not a profitable trader. End of discussion. End of story. It's the same conversation I have with people when I say, hey, I think you should trade 10 micros instead of 1 mini. Well, but if I do that, I'm not, the commissions eat me up and I'm not profitable. Well, what do I say on this show? If the commissions are the difference between you being a profitable trader and a non-profitable trader, you are not a profitable trader. Okay, and these things, guys, I understand there's probably somebody fuming on the other end of this stream right now, and there's probably a lot of you kind of nodding. There's probably a few of you saying, oh, okay, I get it, but I don't, and that's okay. But, guys, it's... I just, I would have passed the eval if not for this. No, guys, I have no tolerance for excuse makers in this business. I just don't. Again, I'm sorry if this sounds harsh. I usually try to stay very positive on this show. Now, there are reasons why again, the difference between reasons and excuses. There may be a reason why a trade didn't go a certain way or this or that, and that's fine. Maybe it just didn't work. Maybe the setup was perfect and it just didn't work. I was talking with a client earlier today. He was telling me he took a trade that I think it was either a break even or a slightly red trade, and I'm looking at the setup, and I told him, I said, "That's a great setup. I'd take that setup 10 out of 10 times." It was when I was gone this morning. And sometimes the best setups in the world just don't work, and that's okay. You keep taking them because you have the probabilities and statistics on your side, and you have the probability and statistics on your side because you've made that same trade hundreds of times before. Okay? But, if you really have it in your head, guys, I would pass this eval if not for this rule, whatever it may be. Position size, trailing drawdown, static draw, whatever. Guys, if you can trade, none of it matters. It really, really doesn't. Now, again, that doesn't mean you're not going to make a mistake or two. It doesn't mean you're not going to hit a daily or a total drawdown and have to reset or anything like that. That's okay. There's no shame in having to reset. But once you're doing it 10, 12, 15, 20, 30, 40, I believe I had somebody on one of my events tell me they'd failed 80 straight combines. And what do I always say? Well, what are you going to do different for 81? I love the attitude of, I'm going to dust myself off. I'm going to get up off the mat and I'm going to go for it again. I love that attitude, but you got to go about it the right way. Okay. You got to go about it in a way that, again, if a boxer loses a fight, do they want to turn around and fight tomorrow? No, they want to go back in the gym. They want to train. They want to, work on the issues that they had. I was in my previous career, I was a basketball coach. We lost a game, to a team. My competitive instinct, I wanted to go play them again. Right now, game's over. Okay, start it over. Let's run it back. But in reality, I had to go watch film. Okay, I had to work on some of the individual things with the players, right, and then be ready for next Friday night. Okay, so that's really I don't like to make a ton of sports analogies, even though I'm a huge sports guy, because I know it doesn't always translate, and people don't always love sports. But guys, that type, whether you want to do football, basketball, whatever the case may be, is a great analogy. Sometimes you're going to have a bad day or you're going to have a bad game. Okay, then it's important to acknowledge what went wrong, make whatever efforts that you can make to correct it, and only when you're ready, go take the floor again. Okay, so. Yeah, I mean, Johan, no offense, my friend, but you're sort of just proving my point for me, right? Like, is unrealized profit trailing stop the most ideal thing in the world to pass a combine? No. But you also got to, I understand that from a trader's point of view. I completely understand that. In fact, I just told you I failed some of my practice evals, and that happened to me a couple of times, right? But at the end of the day, it's... eventually, you've got it's laid out very clearly on the website. You don't need me to break it down right now. Eventually, they're going to give you actual real capital in a live brokerage account and let you keep 80 to 90% of the profits, depending on the situation. Okay. For them to do that, they sure as hell need to know you can trade and that you can manage risk. Guys, at $2,000, for example, the $50,000 standard account, which is on sale right now. It's a good opportunity to pull this up. For $99 across the board, $25,000, $99. Let's get this off the screen so you can see the codes. $50,000, $99. $100,000, $99. Okay, guys, for the $50,000, the trailing drawdown is $2,000. Okay, is that the most convenient thing in the world? No, but if I'm giving you my money to trade, if I were to design a combine where I'm going to give somebody my actual money to trade, it's going to be a hell of a lot more difficult than what these guys are doing. I'm keeping it real. So yeah, and James, you bring up a good point. To me, if you're hitting that trailing drawdown consistently with wins, so you're winning some trades, but that tells me you're not taking your profits when you should be taking your profits, or at least partial profits. Maybe try scaling out of your winners next time. Okay, so if your position size is, let's say, 2 minis, maybe like I'll use the NQ for an example because I know a lot of us trade it. Everyone wants to hold the 2 minis for a 50-point win. They get 40 points and then it retraces and they bomb out. All right, I've specifically talked to somebody that happened to, so I know that's a situation. How about taking the first contract off at, say, 25 handles instead of trying for 50? And then put a stop in at just above break even for the rest. So you won't be sitting there, with a trailing drawdown. And guys, to be honest, some people that I've worked with, and I look at their journals, and they're saying, well, it's that darn trailing drawdown. Well, most of their trades were never profitable to begin with. Okay? So there is nothing more valuable for a trader than self-awareness, and that takes time to develop. It takes time to be able to know where your issues are and to correct them. Okay? All right. So I want to make sure, guys, we didn't really get to questions today, but if you ever have any questions that you want answers on this show, please check us out. You can just message me directly on Discord, Trader Matt, or you can email me, matt@teresiastrading.com. That's TIRESIAS trading.com. It's my personal email. You're welcome to reach out. I try to get back to emails within 24 hours. Sometimes I'm not successful. And if I ever don't answer you for a few days, just like re-up the email because I have so much crap coming into there. So, yeah. So, Ethan, that's a good point. Most props also have their guys start with scalping. Guys, I'm going to just be 100% honest with you. Let me define scalping. To me, okay, scalping is less about time than it is about, what you're going for. In the NQ, if you're playing for less than 10 handles, so if you're getting in, where's the NQ right now? 18.023, and you're trying to get out at like 18.030, that's scalping. Okay. Now, there's nothing wrong with that. If you, again, I don't think that's the best way for newer traders to make money, but if you can demonstrate to me consistently that you make money with that, more power to you. Okay, I prefer slightly smaller position sizes, going for 25, 30 handles in the NQ to, risking 20 to make 30, whatever the case may be. Okay, but guys, at some point, and I know this, I've worked with probably about over 300 traders in one-on-one scenarios. I've spoken to events in front of thousands of people, both live and virtual. Okay, I've talked to every kind of trader imaginable, from the best awesome, well-balanced trader to the most mess of, losing 7 figures of their own money trader, right? I've seen everything in between. At some point, you have to hold yourself accountable, and you have to stop making excuses. Okay? This is trading. This is the ultimate binary. You are a profitable trader, or you are not. End of discussion. End of story. There's no more to say about it there. All right. So, I want to thank you guys for tuning in to another edition of Beyond the Bell. This was sort of a come to JPOW edition, as we were. I hope, honestly, guys, I hope something I said got through to you today. We'll be back tomorrow for Hump Day, middle of the week, so we're looking forward to that. Hopefully, guys, we get a little price action expansion in the next couple of days. But again, we don't know how many opportunities the market's going to give us the rest of the day or the rest of the week. We just know what we're going to do when we get them. So thank you for tuning in for another edition of Beyond the Bell. Don't forget to check out the sale, the flash sale, which is live now on the website, the various codes. Actually, let me put that up one more time before we call this a show. There it is, guys. Have a great rest of your day. I will see you tomorrow for another edition of Beyond the Bell. Good night.